Serviced accommodation and VAT, how does it all fit together? Let's take a look today. Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. As serviced accommodation is a trading business, we fall within the VAT regulations, which means if we go over the 85,000 compulsory VAT limit, we have to register for VAT. So what does that involve? Why would I maybe do it earlier? What are the consequences? So the first thing is, when you go over, you have got 30 days to get registered. So please do keep track of those bookings. Please do keep track of what your income level is, because it's very crucial that after you go over, you've only got 1 month to get registered. So if I went over the limit in December or January, let's go with December, then I've got till the end of January, and then I need to be registered by the 1st of February. And that's the same whatever month it is during the year. It doesn't come in at your year end, it doesn't come in at any other point in time. So you need to just keep track of it on a rolling 12 monthly basis. So I mean by rolling 12 months, you go from say January to December, whatever month you started, all the way through to the first 12 months after you started, and then you start dropping off the first month and adding on the next month. So if I start with January to December, when we get to December and we get to the next January, I now look at February through to January, and then March through to February, and you keep rolling until you get over the 85,000 limit. Now, it's very crucial you get registered correctly at the right time, because if not, then you may be registering late and there are potential penalties for that circumstance, which I would love you to avoid if possible. Now, there is the option that you might think, well, actually, what if I registered a bit earlier? And you can voluntarily register. And there are some occasions where it might even be beneficial to you to register early, depending what you're doing. If you are working with corporate clients and they are VAT registered businesses, then there is an argument for whether or not to register at this earlier point in time, because any VAT you are incurring on any of your bills, like your energy bills, your Virgin, your Netflix, your accountancy, telephone, all of these different bills that you may be incurring, there is VAT on. So if your end user, such as a company, is renting your property regularly, then they'll already be VAT registered. The VAT doesn't bother them. So you might actually be in a better position doing it that way. However, if you are just to the general public, it is more holiday, it's more individuals going on conferences and business trips, so there possibly can't be actually claiming any VAT back, then you're better waiting till the 85,000 is achieved. So now you're registered, what do you need to do, or how do you get registered? You need to go onto HMRC's site and get registered with them. You'll need certain information, and check out the video on VAT registration to find out more about that side of things. When you're registered, you now need to charge VAT, and that is quite a simple process, as most of the different booking channels that hopefully you use will have areas where you can tell them that you're now VAT registered and they need to be adding VAT onto the booking that they are making on your behalf. So hopefully that side of things becomes easier. You just need to make sure you tick all the relevant settings to make sure it fits together. And then the process going forward just means that you now have a very strict quarterly timing. So if you registered in December, you probably have to do a VAT return December, January, February, and then in March you need to pull together your VAT return. And this will cover all the income and all the expenses that you have, which therefore means by the end of March, by the 7th of April, you'll need to have submitted digitally your VAT return to HM Revenue and Customs. Now, this is a great point to bring into Making Tax Digital, because Making Tax Digital has been in for VAT for a number of years. You may have seen videos on the channel about Making Tax Digital for self-assessment, which is coming very, very soon. But Making Tax Digital for VAT has been in for many years now. And what this means is you need to be keeping your records digitally, which I'm guessing you probably are if you're working with things like booking.com, Airbnb, cottages.com. There's many a different website that you can be using, and it's probably a lot easier to be doing things in a digital format. So on that basis, you've probably got quite a lot of it digitally, but now you need some bookkeeping software, if you've not already got it, to bring it all together, I would say. So check out the video on bookkeeping software to have a look at what is going to be best for you. But then you'll be able to do this all through that software, and then the VAT filing process actually becomes really simple. As long as you get all the information into the software correctly in the right way, it will pull together your VAT return for you, which is basically 9 numbers. The first number that is on the VAT return is your sales income, or your VAT on sales income, I should say. The second one is something to do with EC sales, which at this point you're probably going to be doing a 0 because you're doing something, I'm guessing, in the UK. Box 3 is then the addition of box 1 and 2. So it's pretty much going to be the VAT on your sales. Box 4 is where we include all of our VAT on our expenses, which again your software will pull together for you, so it's just a summary of all that data. Box 5 is the most important for you because it will tell you how much you owe or how much you are going to be reclaiming. Box 6 then is the net value of all your sales. So this is all of those bookings that you have had into your accommodation. Box 7 covers the net purchases figure, so this is how much have you spent less the VAT to give you a figure of how much you've actually spent in your business that is VAT applicable. Box 8 and 9 are then to do with EC sales and purchases, which again I'm expecting for most of the people watching this video is going to be a big fat 0 because we're talking about UK property investment. So as you can see, there's not anything overly complex about doing a VAT return. There's just maybe a lot of numbers, a lot of figures that you've got to collate together to get into that format. But again, make sure you get the right software, and hopefully this process should be relatively straightforward, should be relatively simple, but do check with your accountant if you have any questions on it or you want any assistance, because I'm sure that they would be happy to support you in this area. The final quirk that I'm going to cover on our video today for serviced accommodation and VAT is one very crucial one that you need to be aware of, and that's the idea of long stays. For someone who's stopped more than 29 days, the VAT position changes. And the reason it changes is because it becomes now from a short-term booking to arguably a long stay. And literally on that very 29th day, the VAT position changes. So if someone stops for say 2-3 weeks a month, then goes away and then comes back again, you have to charge them VAT on every stay for those 3 weeks. If someone stops for 6 weeks, then for the first 29 days or 28 days, you will charge VAT. From the 29th day, you will now not charge VAT as it has become a long stay. You may have to charge VAT on any additional services you provide. So if you're doing room service, if you're going in and cleaning the property, if you're going in and changing the sheets, some of those sorts of services would still be chargeable to VAT. So you then need to look at how much you're charging that person and what is the split between the services provided and the actual accommodation. The accommodation is VAT free, so exempt from VAT, but the services you are providing are not VAT free, they are VATable at the normal VAT rates. So this just adds an extra layer of complication into your VAT calculations for your sales. If you don't have anybody staying more than 29 days, then it's relatively, hopefully, straightforward and it all fits together. If it's anyone over this time period, then you just need to be aware that there is a change in how the VAT position sits. Obviously, keep aware of the VAT rates for serviced accommodation. There have been a number of changes over recent years as the government's tried to support businesses in this area with hotels and accommodation for holiday bookings. So just be aware of what the VAT rate is. Currently the VAT rate is sitting at 20% for all standard rates. However, there have been reductions to 12.5% and 5% and different things over the years. So make sure you are just aware of what the current rate is for serviced accommodation as we go through budgets, these may be announced for any changes that are happening. But at present it's 20%, but just be aware that things can change and it doesn't necessarily just stay the same in this area of your business. This is just an overview of how VAT and serviced accommodation fit together. There will be a separate video on long stay and VAT for serviced accommodation to just go into the detail of exactly how it works when you have a visitor that goes over 29 days. So hopefully that just gives you the full details of how it all fits together. Keep track of your sales income so you know when you go over, and then as soon as you do go over, make sure that you get registered on time. Hopefully today you've figured out how VAT works in relation to your serviced accommodation business. If you've got any questions, please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.